Hi, welcome back to our channel. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode, we are going to be talking about IR35 changes in the public sector, and this is going to be hosted by our co-founder, Vijay. On the 6th of April 2021, new IR35 legislation will come into effect for the private sector to align how a contractor's IR35 status will be determined with the public sector. When the IR35 changes come into effect in April 2021, the responsibility for determining a contractor's IR35 status and paying relevant tax will be passed to the companies engaging them. And this webinar is just to clarify this in more detail and give guidance to contractors about the change.
Okay, thank you everyone for joining again. So as I said, this webinar is about the IR35 rules that's going to come effective from 2021. And as most of you know, that this is supposed to be happening last year, but it got postponed because of COVID. So it's a bit of a refresher on the same webinar that we did similar time last year, right? So a bit about WIS. We founded the company back in 2009. We are both regulated by CIMA and SECA. Obviously, we ventured down to a few other businesses like mortgages, wealth, umbrella, because we try to kind of cater for all the finance your needs in under one roof. Bit about me. I'm the W of WIS. Co-founded the company with my two good friends, Iltika and Sunet. Qualified as chartered certified accountant back in 2008, and I'm on LinkedIn if you want to connect. And most of my clients know my email and my mobile number. You're more than welcome to contact me if you have any questions back of this webinar. Quite a lot to cover on today's webinar, starting from what's the difference between employed, self-employed, and a contractor via limited company. We will also discuss briefly about IR35 and what is changing from 2021 and what can an end client do and what factors are considered for IR35. What are the options available to you after 2021 if you caught inside IR35? What can you do right now? And what will be the take home if you are using umbrella company inside IR35? And last to talk about WIS umbrella. I also got some FAQs that people have been asking in recent past. I've kind of compiled those FAQs, but I'm more than happy to answer any other questions in the back of this webinar. Okay, difference between employed, self-employed, and a contractor via limited company. So if somebody's employed, obviously, they work under employment contract. Another name for this, permanent employment. So they do get their regular pays. They do their employment rights. They have the company perks like health insurance or car benefits, etc. And they do have a clear career progress. So there's a appraisal process, etc. They get holiday pay, and I've added the furlough pay. Some of the permanent employees, because of COVID, if they couldn't get to work, there's a furlough pay of maximum 2,500 available for those employees. The con of working as employed is obviously there's no flexibility. You tend to pay much more tax than if you work as a contractor. Obviously, workplace politics, and you're part and parcel of the team. So some people do not feel motivated about that. And the relationship you have with your company is more of a boss-servant relationship. And you can't deduct expenses as a permanent employee. So you need to take your net salary and spend that net salary on your traveling and meals and etc. Good thing with employed is obviously you don't have any admin work involved that because a lot of your tax is deducted at source. So nothing to file to HMRC. The typical examples of employed would be your doctors, your nurses, etc. And then we have self-employed. So self-employed examples would be your window cleaners, your plumbers, etc. These are the people who do not have limited companies and they work on their own account, right? The benefits of being a self-employed is obviously flexible working arrangements. You are your own boss. no politics to deal with, unlimited holidays. If you work, you get paid. If you don't work, you don't get paid. Opportunities are limitless, and obviously there's some tax advantage, and business expenses can be deducted. The con of being self-employed is obviously it's very risky. No employment rights, no perks. Some people won't see a progress on the career. A lot of admin work to deal with, and sometimes as a self-employed you might feel lonely, thinking you're the only one, because there is a social aspect of working as an employee, right? And obviously if you are self-employed, your losses are not limited because you are working on your own account. If you make a blunder on one of the work, you will have to pay it from your pocket, right? And that loss is not limited. As a self-employed, you need to file something called a self-assessment return to HMRC. On the self-assessment return, you will complete something called self-employed section. But they'll pay the normal tax as a employed, and we'll come to the taxes in the next slide. And lastly, it's a limited company contractor, which most of you will belong to this category. You have the same kind of benefits as a self-employed, same kind of cons as a self-employed. Only difference being, as a limited company contractor, your losses are limited to what the money that you have in the company or the insurance you have in the company. So if you've done something wrong, nobody can sue you and ask you to pay the losses by asking you to sell the house, for example, which will be on your personal name. Whereas on self-employed, they can do that, right? With regard to admin work, obviously, company contractors have to do a lot of admin work, such as company tax return, self-assessment return, your VAT, all the other returns come with it. The typical example would be an IT contractor. So those are the three different categories that working or doing some work. And the difference in taxes, right? So I've taken a simple example, 50,000. I know a lot of people earn more than 50,000, right? But I've kind of tried to compare on a 50,000, so it's easier to compare on the taxes, because in England, the tax threshold is 50,000. So if your gross salary as an employed, as a permanent employee, if you earn a 50,000 gross salary, you're told, after paying your taxes and income tax and employee national insurance, you will earn something called something like 37,642 as your net income. Obviously, you can't deduct any expenses. So you'll have to take the 37,000 and pay for your meals, pay for your travel, etc. If you're self-employed, you pay national insurance on your profit, which is a bit lower than the national insurance on a permanent employee. The taxes, the income tax doesn't change. Your net salary would be 38,696. And for this example, I've ignored the expenses. The key thing is you can deduct some expenses, business expenses from these numbers. But for comparison purposes, I've left that out to show there's an incremental increase working as self-employed. If you work as a limited company contractor, your company will receive 50,000 income. There's no national insurance to pay if you're a single man company, and you'll pay corporation tax and dividend tax on that 50,000 earnings, and your net income will be 79,994. Again, I've excluded the expenses. As you know, the biggest benefit working as a limited company contractor is you can take some expenses out from your company. Okay, and also assumed it's one-man company rather than husband and wife company. So if it's husband and wife company, again the taxes will be much less than what it is on the slide there. Okay, so those are the tax numbers. So obviously, because limited company contractors pay much less tax compared to an employee category, HMRC got an issue, right? That's why they're trying to introduce these new things, and that's why they introduced something called a IR35. So what does IR35 mean? So IR means inland revenue. It's an old name for HMRC. So across they published material called 35. So it's inland revenue 35 is commonly known for anything for people to not to work as limited company contractors, but to forcing them to work as a permanent employees. Introduced back in 2000, nearly 20 years ago. So it's not a new thing. This is also known as disguised employment or payroll working rules. It's an anti-avoidance legislation. Basically, they didn't want people to leave their permanent job on a Friday and come back to the same work on Monday as a limited company contractor. So the main aim of this legislation is to make sure that individuals pay the correct tax. Some individuals may prefer to ask to work through an intermediary like their own company, etc. So obviously that way you don't have a role of an employment, you have a supplier client relationship. Yeah, that's about IR35. Again, the points how to decide IR35 or inside IR35, outside IR35, we'll come to that in a few slides later. Sorry, that should have been what is changing from April 2021 rather than 2020. So the current rule of deciding whether somebody is inside IR35 or outside IR35, that lies within the contractor company and the contractor. So in this example, assume Mr. Joe Bloggs is a contractor and he has his own personal services company called Joe Bloggs Limited, and he has a recruitment agent called Grace Recruitment, and he works for a company called ABC Limited. At current rules, the deciding whether inside IR35 or outside IR35, that responsibility is either with the contractor and his service company, right? So what is changing from 2021 is that shifting from contractor limited company to the end client and to the agent. Okay, so they need to decide whether the particular contract is inside IR35 or outside IR35. I'll go through the points how they decide in a minute, but that's what is changing. And the one exclusion here is if your end client is a small company. So for example, if that company has less than 10.2 million turnover, or balance sheet size of less than 5.1 million, or less than 50 employees, they can get exemption from this rule. So the old rules will prevail. So for example, if ABC Limited is a small company, they don't have to do that. They can still utilize the old rules. So that's the only exclusion at the moment. Okay. So what will end client do? Because a lot of end clients do not want to take the risk, right? So we see a lot of, especially on the banking sector, a lot of the financial institutions are saying that they don't want to take any risks, so they're doing a blanket ban approach of saying they don't want to take any PSC limited contractors. Okay, so but what does law say? What should the client do post April? So if they are not doing a blanket ban, they need to do something called a status determination statement, or SDS, and they have to determine the contractor's role is whether it's inside IR35 or outside IR35. Client can use something called a HMRC CES tool, check employment status for tax, or external tools like QDOS, IR35 Shield, or PwC, etc. We've always encouraged clients to use external tools than the HMRC tool, because HMRC tool, in our personal opinion, does not meet all the requirements for IR35, and they don't stand by the result that kicks out, right? So the best to use the external tool, which means you get insurance back of it. So if something goes wrong, these status determinations are backed with insurances. As I said, some financial institutions are doing a blanket ban approach, which is quite bad in my opinion, because that means that they're not recognizing the talent that contractors bring in. But some big financial institutions do not want to take this risk. Okay, if client determines your role as outside IR35, and client takes the responsibility of future HMRC investigations. So that's the biggest change, right? So currently, if HMRC challenges you, why are you outside IR35? Looks like you are inside IR35. It's your responsibility to go and challenge that. But in future, it'll be client's responsibility. If determined inside IR35, obviously the taxes will have to be deducted as a permanent employee at source, and then you get a net salary back of it. On this SDS process, it's important contractor gets involved and voice their opinion. It's very important that you tell the client what you do, what you don't do, etc. So then client can make a correct determination of your role. Once the SDS or status determination has been issued, you've got 45 days if you want to appeal against it. So if you've been assessed as inside IR35, I strongly go and ask you to go and challenge that, especially if you are going to be remaining on the same role, because they have to give some more detailed analysis of why they determine you as inside IR35, especially if they use the HMRC CES tool. So if after appealing for this, the determination, client must either confirm the determination is correct with reasons, and provide a new determination statement if they reach a different conclusion, and withdraw the previous one. And you need to keep record of all this for any future investigations. So IR35 test and primary factors of how either client or currently how you determine whether you're inside IR35 or outside IR35. Some people send us to review the contract. So these are the things that we look in a contract too, right? Obviously, we assume your working arrangement kind of mirror the contract. So three main things that we check on a contract to make sure that the outside IR35 is something called a personal service. So when I say personal service, we are looking for a substitution clause. So if you can't go to work, whether you can substitute, you can send a substitute to do that work, and whether this assignment is how long this assignment is for, etc. And control. So as an independent contractor, you need to have the control to you have the skill sets and all the knowledge, experience to deliver the service, right? So you are in your control of your deliveries rather than somebody telling you what to do. So how you do the work, and where you're doing the work, and what is your time frame to do the work, etc. All that kicks in under control. And the final one is something called a mutuality of obligation, right? So as a permanent employee, typically on your employment contract, you have something called it's a relationship, it's a boss-servant relationship. So if you do not have, if you work with the boss, then if you have work, and if you don't have work, your employee can keep giving you other work, and you're supposed to do that because you're on an employment relationship. But as a contractor, you don't have to do that. If client is giving extra work, you have to tell them there'll be extra cost for that, and you have the right to say yes or no. And second things, unlike a lot of the employment contracts, you have right to terminate. So if you don't want to work for a client, you can give a notice and terminate the agreement, right? The other secondary factor that we look for on the typical contract is whether you are using your own equipment, whether you are using client equipment, insurance, whether you are having business insurance such as professional indemnity, public liability, etc. And basis of payment, are they paying after you finish the work or in advance, etc. Length of engagement. So the longer you work for a particular client, obviously there's a risk of you becoming part and parcel of that organization. So the shorter the engagement, better for IR35. The part and parcel of the organization. When I say part and parcel, I meant, are you part of their staff training? Do you get involved with their appraisal process, etc.? As a contractor, you're not supposed to get involved with any of that. Intention of the parties. So as a supplier of service, your intention is to go and deliver a project and walk out and get another project. And same with your client. They expect you to do a particular project and finish that and get another project thereafter. As a contractor, obviously you have a risk of non-payment, so client might not be able to pay that, so you are taking that risk. So that's on the contract too. And engagement terms, what the contract says should reflect your working arrangements, right? That's something that HMRC always look for. And as a contractor, your opportunity to profit. So it doesn't limit you to do one contract. You can do multiple contracts as long as that bringing more revenue to your limited company. Okay. CES tool, it looks like this. Anyone can go and have a look at it. It can be completely anonymous if you want to give it a go on it. The main thing we are saying why CES tool is not good is CES tool ignores this something called this important factor of mutuality obligation. So it only takes these two, which is why we always say, get external tool which includes this. And we've been from the industry, we've been asking HMRC to include this, but HMRC knows that it will be quite of a bad thing for them, because if they include lot of the assessment will become outside IR35, and they've recently lost a case purely based on a mutual aid obligation. So it's very important if you get a statement determination saying inside IR35, WIS yes to go and challenge the client and ask them for external determination. Okay. Okay, so what are the options after April 2021, particularly if you caught inside IR35, right? So these are the 4 primary options you would have. So you can either go as a permanent employee to the same client or a different permanent employment. You can use your same limited company and receive something called a deemed payment, very confusing and quite admin intensive. So, we don't recommend too much, but, you can do that if you want to. Using an umbrella company, so they do all the admin work for you and they have the insurance on behalf of you. And finally, working with the recruitment agent under PAYE or a zero-hour contract. So those are the 4 main options you would have. And what can you do right now? So if you are a contractor currently, always speak to the client or a recruiter if you're first point of contact, and ask them, what they intend to do after April 2021. And if they made a wrong determination, always challenge that. Budget is on 3rd of March. I don't think they're gonna pull this off at last minute like they did last time, because it's already on the legislation. So it says too late anything to happen. But we'll have to wait and see next week. If something happens, we will come back to you. On a positive note, this week I've seen 3 to 4 contracts outside IR35 with correct determination. So the more the industry understands how to use external tools to determine the status, I think there is still hope and chance for people to get outside IR35 contracts. And also, finally, if you think there's no way that you can get inside IR35 contracts, you'd also need to think what you're going to do with your current limited company. If you're undecided on umbrella company, do let us know. We can send details of our umbrella company and we can talk you through, how the umbrella company works. Okay. Finally, if you are inside IR35, what will your net take home be using umbrella company? So the main difference between an umbrella company and a normal employment is with umbrella company, they have to deduct the employer's NI. So they take the money out before they pay you the net salary. So in this example, we use 21.67 days because a lot of the umbrella companies use that as an assumption. So if you work for £300 a day for 21.67 days, the umbrella company will receive an income of 6,501. On that, they'll deduct the margin and the employer's NI and the apprentice levy. And what they'll pay you is the gross salary of 5,723. On that gross salary, obviously, you'll have to pay your income tax and employees NI, and you will get the net salary. And we can, if you want illustration for your daily rates, do let us know, and we can come back to you. The assumptions here is we assume the 1250L tax code is used. So, we assume that 12,500 pounds of personal allowance been in use. As you know, if you earn more than 125,000, that goes away, but we've taken that out for this example. And opted out for pensions. The pension is the main thing that you need to think on umbrella, because every single pound you put, that saves a lot of money in pensions. And we also assume no other earnings or salary sacrifice schemes. Okay. So how does the umbrella work, or our WS umbrella work? So if you sign up as a umbrella client or employee, the relationship that you will have with the umbrella company is that you have an employee relationship. So when I say employee, there's something called overarching employment contract, meaning that if you have a client to pay you the invoices, then you get a salary back of it. So you'll sign an employment contract with this umbrella. And this umbrella will either invoice the client or Grace Recruitment, receive the money, do all the deductions and payroll, and pay you the net salary. We are very compliant with all HMRC rules, so we don't do any offshore structures, etc. Be very careful when you choose umbrella company. There are a lot of umbrella companies who guarantee you I take home, and when you ask them to send the illustration, they'll send you from either trust or loans, etc. That will all look quite good on the paper, but we've seen a lot of clients still in trouble for using dodgy umbrella companies few years ago. And also be careful of some umbrella companies giving you illustrations on 1 to 50L, even if your income is more than 155,000. As umbrella employee, you have all the employee rights like S&P, SSSP, etc. The umbrella company will cover all the insurance like PI, public liability, employer liability, etc. And obviously, you know, WIS umbrella is again owned by myself, Itika, and Sunet, so you know the background of the directors. And we also guarantee the same day payments. So if your client pays on the same day, we pay you on the same day. And as I said, all employment income is, you know, paid as employment income, and there's no offshore or, you know, loan structures there. We are not currently FCSA regulated because FCSA requires you need to have a certain number of employees before you get regulated, but we will get there. But for the moment, if your client or umbrella company asks for FCSA regulated umbrella company, do let us know. We do have a partnership with a couple of FCSA regulated umbrella companies that we can put in touch with you. So these are some of the, you know, frequently asked questions I tend to get back of this. One of the questions was, if I was determined inside IR35 from April 2021 again for the same role I did pre-April 2021, will it be risky? Our opinion is yes, it will be risky, right? But HMRC is saying they're not going to do retrospective challenges, and they've also said they're going to be light touch for this year. But in our opinion, if we don't want any risk, ideally best to change the seat. But if you can't change the seat, you know, I'm sure everybody is struggling to get jobs these days. It's fine, but you know, be aware of this risk. And this is another popular topic I always get questioned on. Can I form a consultants company with friends and provide the services? There's a rule called MSC, Master Services Composite Regulation. This is a big topic. Basically, what HMRC says is that if you do this one, you need to pay everything as a salaried income rather than paying as dividends income. So there's a case that HMRC won recently. So this is a big topic. So try to avoid this because it's basically you're trying to avoid tax by not doing the right thing. Statement of work, again, the contract that I've seen recently as outside IR35, they all have statement of work. It's a good thing to have, but it doesn't guarantee you from outside IR35. But the latest contracts I've seen from outside IR35, all of them seem to have a statement of work. So statement of works are basically outcome-based contracts. So they don't technically talk about your daily rate. They talk about the project value. So you go for a 6 months project, say 50,000, and then on the 50,000, they pay that in 6 installments. So it sounds a bit different than a daily hourly rate basis. As I said, does SOW mitigate mitigate IR35? It does not, because you still need to have a contract which is outside IR35, also working arrangements which are outside IR35. What can you do to your current company if you think this is the end? You can either close, liquidate, invest, keep it dormant for future. If you get outside IR35 contracts, anything that you decide, let us know. The final question is, if liquidated, can you claim entrepreneur relief, or another name for that is business asset relief? We don't know. What we don't know is that after budget in 3rd of March, we don't know if this will be still available. So, if you're thinking of it, it's quite late in my opinion, because you should have done it some time ago, because the budget's on a week's time. So I think if you try and liquidate now, it might be too late. So I think just best wait till budget and see what's happening on the budget and decide what you want to do with the company. If Chancellor doesn't change anything on it, and if he's not gonna pull out this from the current rules, you can go ahead and liquidate the company. Obviously, company needs to be a trading company. You need to be employee, director, shareholder of the company for more than 2 years. And if you choose to take entrepreneurial leave, you can't go back to contracting for next 2 to 3 years. It's always benefit to go liquidate if you have more than 35,000 as available for dividends. If it's less than 35,000, you're better off closing the company, but taking the same advantage. Again, speak to us if you want to do that. Okay, that's it from me. So I'm gonna stop sharing the screen and open for questions. Okay. Cool. If you have any questions, fire away. You can either unmute yourself and ask the questions, or you can use the chat window to ask the question I'm happy to answer. Thank you.
What's the difference between closing and liquidating?
Thanks, Vivek. So closing is something called a strike off. So you don't have to get a liquidator to do that for you. So you can do it directly through the company's house. You need to, the only condition is the total amount should be less than 25,000 available dividends. If anything more than that, it's not, you can't strike off. So the condition is to do a strike off. The available dividend has to be less than 25,000. If not, it has to be liquidated. When I say liquidation, it's called a member voluntary liquidation. So the liquidator has to get involved there to publish a name, the company name, saying that the company is, getting liquidated. They have to write HMRC. There's a process to follow. So we work with the liquidator who can, advise you further if you want to.
Right.
Thank you.
Thank you.
Any other questions from anyone?
Yeah, one question is Mrinal here. One question with regard to the IR35 seal, the external determination, and you did mention it covers from probably the insurance side, if at all anything. Again, I haven't explored, don't know if there is any insurance that covers from IR35 investigation and that kind of things. But then later you mentioned the risk kind of lies with the end client. So is then kind of irrelevant from the limited company's point of view? I mean, so I'm talking about the insurance part only.
Yeah, that's fine.
The determination is.
Yeah. So this state determinations, when I said insurance, the insurance is not for you, insurance for the client. So the determination is done by the client, right? So if they do any of these, if they use any of these external tools to determine the status of yourself, so they're basically getting insurance against any future claims. And in future, as I said, very unlikely HMR is going to come after you. HMR is going to go after the client for determining your outside IR35, and they can have this insurance to show that they've done the proper assessment.
Right.
Yeah.
Okay.
Yeah.
I've got a quick question. So in this transition period, right, from March to April, for example, if someone is on a 4-week notice or 2 weeks or whatever that is, and by that time, the client or a company, they don't determine them, right? And they say, now you're inside, right?
Yeah.
Now, either one option is to leave them before, and on your contract, there's a notice period, for example, of 4 weeks, and and you are in that notice period, which passes 6th April. What will happen in that case?
So any contract that extends post 6th April, Gaurav, it's very, very important you go and speak to your client or recruiter now to get assessment now itself, right? Because you shouldn't be waiting till 6th of April to ask them what's happening. You should ask now what's going to happen. And I've seen a lot of contracts at the expiry date of 5th of April from my experience. Anything that extension more than 5th of April, they've always, like 3 contracts that I reviewed this week, they've been extended, post April. They all add the attachment of state of determination back of the contract. So it's very important you talk to them and get the state of determination now if your contract is extending post April 6th.
Perfect. Thank you.
Vijay, can you hear me?
I can, yes.
Okay, it's troubling with my microphone and all those gadgets. Right, I got a couple of questions. The one with the substitution.
Yeah.
I've been hearing for last 1 or 2 years, because earlier with Siemens and things, and there are ways to get out of this substitution, which we tried last time and it worked with Kudos. But this time I have a different contract with my previous permanent company. And last 2 weeks ago, I had a questionnaire filled up by the HR people with them. And what they said with substitution, because it's a one-person company, limited company, I said I can provide you with substitution if required, and it can be mutually understand. If I'm going on a holiday for a day or 2, it's not a big deal with the client, but I can do that substitution. And the guy, the manager who is recruiting, he said, no, I don't want that substitution because I'm recruiting you. I'm giving you this contract because of your spatial skill. I don't want anybody else. But he said that should be fine. 1 or 2 days here and there is not the stoppage of the work, but I want you. Now, I haven't got feedback from their HR with that question. I'm getting it on Friday. We have a review meeting. But in case if this is the case, is there a way to challenge it? Because I'm a one person, and if they say we have taken you as a spatial skilled person,
That's fine. That's fine. Yeah. So the question here is substitution. Yes, it's a valid question. Really good question, to be honest. So substitution, what the contract should say is you have the right to put someone as a substitute, right? So as for the law, you should, if you can, I'm sure you can go to LinkedIn and find somebody with similar skill set, and you can propose that person as a substitute to do your work, right? And if that person screws up and does something wrong, it's your responsibility to fix it. So that's on the contract. So you have the right to nominate a substitute, right? Accepting that substitute or rejecting that substitute, again, it's client's right, right? Client can have the right saying that we don't want. So as long as your contract says you have the right to give a substitute, and also contract says it's client's decision to reject that substitute, accept that substitute, it's fine. You're covering those points. So what we look for in the contracts is whether the substitution clause is there, whether it says, okay, you have the right to propose a substitute. The contract says if that substitute does not do the work, you are legally obliged to kind of fix those errors and make that correct, and you are obliged to pay the substitute. So that's what we are looking for in the contract.
So the clause is important rather than the actual substitution.
Both are important, because what HMRC is after is whether it's in actual fact it's possible. But as long as you have a working arrangement, you have some policy saying if you can't deliver this, you are going to propose this person. That's what they're looking for.
The other thing, a short question, because last 1 year with this pandemic up and down, I had few contracts, I had done few works, and which were like very lasting, starting with like only for 4 weeks and went up to 4 months, and like very short contract, maybe of weeks, not even months. Now say going forward, if with the same client where I'm expecting next few months to work with, if they say, oh, you got to be an inside, and with the limited company, you said you got few choices, but I don't know, my contracts are always like that, 3 months, 4 months, 4 months. So what would you suggest with the limited company in that case? Because you never know, after 6 months I may get again a one which I wanted, sort of like an outside, you know what I mean?
Yeah, so with limited company, what you need to understand is, as for the current rules, you need to run the company for a year, Bhupan, unfortunately, right? So, you need to run the company for a year. So you might get a contract for 6 months. You might not get a contract for 6 months. I previously had a client who came down from Australia, who worked for 9 months. In 9 months and 3 months, he took holidays and traveled Europe, right? So that's the risk that you take with the company. So if you have short-term agreements here and there, unfortunately, you still have to run the company for a year, right? You can't get away with that. You can obviously try to shorten the period and
But what I showed to the HMRC as a dormant or something? What would I do?
Yes, so there's no easy switch to on off of dormancy. What happens is you still have to file the accounts for 1 year, right? So even if you trade for 4 months, you still have to run accounts for 1 year, right?
Right.
So, and then after 1 year, if you think you're not going to get any contract, then you can decide to be on dormant.
Right. Okay. Yeah. Okay. No worries. That's it. Cheers for that.
Thank you.
Hi, Vijay. Ankit here.
Hi, Ankit. How are you?
Hi. Yeah. Good. Thanks for the lovely presentation. I had a question about this deemed payment option. So in the scenario where I understand it's more complication, like what you explained. It's not very straightforward. But I just wanted to understand what are the advantages of going for that option if you are a husband and wife company?
There's no advantage, because even if it's husband and wife company, Ankit, on the deemed payment, the only salary that you can take is the salary for the main employee, right? So even if it's husband and wife, you can't share the salary with both of you. So that's not allowed on the deemed payment either. The only advantage is, you are taking the risk. Effectively, you are becoming umbrella and doing that yourself, right? So you are taking the risk of doing that. But from my experience, if you're doing it, and if you're mixing your outside IR35 income with inside IR35 income, it's hard to segregate, right? Because everything is coming to one bank account, etc. So from my experience, we've always told the clients either to open a new company and do that, or go through umbrella company, because one other thing with the deemed payment is that you need to have a insurance, right? So your profit indemnity insurance you need to have, and that's a cost. And the issue with deemed payment, you can't even deduct any of the cost from the company. So your company will be loss making, but then unfortunately you can't deduct the cost, and then you won't get any corporation tax relief either.
Right. So in this sort of scenario, if basically if the scenario where the spouse is not working and my contract is inside IR35, right? Whatever money I get and it goes into the company, obviously it's everything tax and everything is paid. So obviously I don't expect to pay any more tax on top of that, right?
Yeah, that's right. So you will take that money just for yourself.
I just take the money, and if the company has money, can the spouse get the usual dividend payment or things like that if the spouse is not working?
Provided the dividend payment, so that's what I told you. So what you're doing there is you're trying to mix your inside and outside of the income, right? So you need to think it as two different companies, right? So assume you have two divisions. One is the inside IR35 division, outside IR35 division. And on the outside IR35 division, you have some profits from the previous time, and you have dividend available, right? So case there, you need to take dividends if you based on your shareholding percentage, typically 50-50. So both of you have to take the dividends. On the inside IR35 business arm, whatever money comes in, you will have to take it as a employment income, but obviously there won't be any tax because the tax will be deducted at source. So, but you'll have to run a payroll from your income from your limited company.
Right. Okay. All right. Thanks, Vijay.
Thank you. Any other questions?
Yeah. Hi, Vijay.
Hi, Mano.
Hi. I got a couple of questions, but I'll start off with just saying that so my contract ends with my client next month, and I'll have a new contract. They've already decided that I'm inside IR35, and I'm okay with that. Because I like working for my client, I'm going to go ahead with inside. I'm going to see if I can increase the rate if possible. But they only accept umbrella company. With umbrella company, I know I will get paid monthly. Obviously, if say I take holidays or in 6 months time, I won't be working for that client, and let's say I pick up an outside 35. What will happen to the tax? Obviously, I've paid more tax within that 6 months than I would have had if I had a let's say an outside contract. Would I get a self-assessment and get rebated for that, or how would that work?
Yeah, so the two things on the umbrella, right? So with the umbrella, obviously it's like a permanent employment, so all your taxes are deducted at source. Some umbrellas keep money for holiday pot and they pay you, when you take holidays, and some umbrellas pay the holiday money then and there. And we like to pay the holiday money then and there because people prefer that, because if umbrella company goes bust, then you don't have anyone to go back and after that, right? So it's always important you ask for the money then and there through the payroll, right? That's the first thing. Say, for example, in your example, say you worked on inside IR35 from April to December, right?
Yeah.
And you paid a lot of tax, and next 3 months you didn't have any income. You're right. You can file a self-assessment return and take out can reclaim the tax that you paid in extra, because all these payroll systems, what they assume is when you earn something in April, they assume you're going to earn the same money for next 12 months, right? That's
correct.
how the payroll software system is set up. So yeah, you can file self-assessment return and reclaim all the money that you paid extra.
Brilliant. Okay, that's great. Thank you.
Okay.
Hi Vijay, this is Kamesh here.
Hi Kamesh.
First of all, thanks for the presentation. It's quite useful.
Okay.
I got a couple of questions I got on that one. One related to the umbrella company. Hearing somewhere in the LinkedIn's and other stuff saying about the NI payment from the employer side is not eligible. They should not be deducting from the overall day rate, but they are detecting for most of them. That's what the umbrella companies are doing. So I'm not understanding on that one. So why we need to, or is there anything coming up we are doing? Am I missing something there basically? And second question is related to what's the difference between the payee and the umbrella company?
Yeah, sure. So two good questions, Kamesh. So I've seen a lot of update on that one. So HMRC actually clarified that I think a couple of months ago by issuing a guidance. So when umbrella company is legally okay to deduct the employer's NI, right? What they have to do is they have to give you a clear understanding of this is your the net take home, and they have to give you that document that with all the breakdown, right? So as a contractor, then you go to the client and ask them, what you're sacrificing something from your the daily rate. So your client should be beefing up and increasing your rate, and that's been happening, from a lot of the conversation from a lot of our clients. So it's perfectly okay for umbrella company to deduct the employer's NI. That's been clarified by HMRC through a guidance a couple of weeks ago. On your second question, Kamesh, I didn't totally understand that. If you just come back on the second question again.
Between the PE and the umbrella model.
That's right. So hardly any difference if you ask me, right? Only thing with the PAYE and the umbrella model is on the PAYE, what they do is they deduct the employer's NI from your contract rate, and then they pay you your gross salary. So if you ask me, hardly any difference on the tax numbers, no difference at all. Some companies prefer doing their own PAYE rather than passing that to umbrella company, because when you pass an umbrella company, they have to do the due diligence of checking, they're doing everything correct, right? So some recruiters are not comfortable doing that, so they're running their own 0-hour or PAYE contracts. But tax-wise, there shouldn't be any difference coming. The bottom number should be exactly the same.
Okay, so take home will be the same for both.
Absolutely, yeah.
Got it. Okay, thanks, Vijay.
That's okay.
I have one question, Mrinal here. Again, thanks for the wonderful question, the FAQ and all the presentation that you did before. The going inside, again, is difficult to answer. I mean, rate increase roughly if it is a single person company. Any idea? Again, depends on circumstances of individuals or companies. I mean, how much increase potentially could keep one at par with the current take home, roughly, again talking about, and also if there are sort of husband-wife company, then what's the rough sort of approximate figure percentage-wise?
That's fine. So actually,
again, maybe difficult to answer.
That's fine. That's fine. So I actually answered this question to a new client a couple of days ago, because he's been going from outside IR35 inside IR35. It's actually you can't compare that unless otherwise you make a lot of assumptions on it, right? Because as a limited company contractor, sometimes you don't take all the money out from the company. You leave the reserves in the company for a rainy day, right? So if you do that, you can't compare percentage at all, right? Because you never know what's going to happen in the future. You don't know the circumstances. So only way to kind of do proper comparison is if you make an assumption that you take all the money out from the company, even by paying 30.5% tax, right? That's the only way to do a comparison. So I did a comparison the other day for someone. Average is a 30% increase that you are looking after. If you want to pay all the taxes, if you want to take all the money out, then and there pay all the higher dividend tax, you need to at least get 30% on your daily rate to compensate for that loss. Because you can't, other way you can't compare that at all.
Yes. No. As I said, I mean, I understand. I mean, looking at the figures. And last question, you talked about statement of work, whereas I did sort of anonymous CES tool assessment of my PSC, and then the mentioning the daily rate and going the other way, statement of work hasn't made any difference. So how important is that? Even if, say, is considered outside IR35 and you continue with the contract says day rate, is that a sort of going to more sort of risky side, would you say?
So as I said, statement of work is a good thing to have, but it's not a must thing to have, right? So what matters is your underlying contract, your working arrangement, and from April, your status determination. So those are the three key important things, if you ask me, right? Statement of work, obviously, it's a good thing to have, and I am seeing a lot of clients and a lot of recruiters sending statement of works purely because the lawyers are advising them to do, right? And if you think as a independent contractor, for example, assume you're a website designer, right? If I'm designing a website, say I've got 5 pages, and I'm agreeing, if you do the first page, I'm going to give you this much. If you do the second page, I'm going to give you this much. It's effectively a supplier contract, right? I'm not saying it doesn't really matter how many days you work. What matters for me is getting a 5-page website. So the statement of work is simple, almost similar to that. So it says, okay, it doesn't really matter how many days you're taking to work. as long as you deliver these milestones. I've seen one contract kind of brings in the milestone and links the daily rate into it. Again, the contract was compliant with IR35 and the client had IR35 shield assessment to back it up. So, we didn't see any issue with that. Yes, statement work, as I said, it's a good thing to have, but it doesn't solve the problem, if you ask me.
Right. Okay. Yeah. Thank you for that. Perhaps I should, proactively talk to the agency and the end client to, moving that. Yeah. Thanks very much for that.
Vijay, can I ask the last question? Sorry, one more. Please.
Yeah, go for it.
Would you suggest any sort of like a contractual return against the purchase order? Because the existing client where I'm working, they give me order like purchase order for 15 days, purchase order for 20 days of work and things, and that's it. Maybe they might agree after this April. Now it's getting more and more streamlined now. But if they keep continuing like this, do I have to have some sort of like written agreement? No, these are my working conditions and things. What would you suggest rather than the purchase order?
You need to have some kind of working arrangement to some kind of contract to say it's a working arrangement. I think purchase order is not just sufficient enough if HMRC challenges. For now, it's your problem, but from 6th of April, it'll be their problem, right? So
it should be. And do you have any template sort of thing?
We do. If anyone want a IR35 compliant template,
can you send the template, please, on an email, please?
Yeah, sure, we'll do that.
Thanks for that.
Sure, that's okay. Yeah, any other questions, anyone?
Hi, Vijay. Praveen here.
Hi, Praveen.
So currently I'm working for a German client actually. So as far as I'm aware, I asked my agent who is in between, he said it will be outside IR35. So to going forward after April, do I need to do anything? Because the client doesn't matter because they directly deposit the money to my business account in euros. So the bank transfers to the pounds. So for this to continue, do I need to declare any statement of work or do I need to make sure anything to continue?
It's actually a really good question, Praveen, because that's one point I've remembered just now that I forgot to cover on overseas arrangements, right? Because I do have a few clients on overseas arrangements. So as per HMRC so far, what they're saying is even if a client is overseas, the client needs to determine the SDS or the status determination statement, but I don't know whether it's practically possible. But what they've said is if a client is abroad, if you're a recruitment agent in the UK, then the responsibility passes to your recruitment agent, right? Because effectively, if you have a UK agreement with a UK recruitment agent, they need to provide you with the status determination. And again, if they can't provide, and if you have a direct engagement with the client in overseas, the responsibility again comes back to you, just how currently it is. So if you have a direct agreement with your overseas client, my advice is get SDS done in CES and check your contract. Make sure that your working arrangements are outside IR35 because effectively the responsibility kind of falls into you if you have a direct agreement with the overseas client.
All right. So I have a recruitment agent who is in UK. So I can ask him then.
Absolutely. Yes.
Thanks.
Thank you.
Hey, Vijay, in terms of, this IR35 insurances, so imagine in a scenario where like lots of other contractors, contract is inside IR35 and I may have to close my company basically. In those scenarios, is it advisable to have the IR35 protection insurance for the future and for how long if that's the case?
Yeah, so HMRC says they can go back and challenge 6 years, right? So they can go back and challenge 6 years even if you close the company down. And if they find, if material things, they can even go back 20 years. But saying that, they failed to sue the top shop owner, right? He paid everything to pension. They're struggling to get money out of it, right? So I don't know how practically it'd be possible if somebody is liquidated, because effectively, if company is liquidated, as I told you earlier, the losses are limited to your company rather than to your personal self, right? That's what the current arrangements are. So answer to your question, Ankit, 6 years is what they can go back, right? So the question is whether you want to keep insurance paying for 6 years, or you want to take the risk and, just, if it comes to that level to, pay it from your back pocket and challenge HMRC at that time. So that's the risk that you need to take, right?
Yeah. All right, thanks, Vijay.
That's okay. Any questions? I do tend to speak too fast, so I thought I couldn't be able to finish all the slides. I'm glad I've managed to finish all the slides. Yeah, if you have any other questions, do let me know. All of you on my LinkedIn or connect me on or through email. I will share these slides. I've got the same presentation again on 26. I noticed some people have signed up for both, so you don't have to keep it repetitive of what we did today. Yeah, if you have any questions, do fire emails. Let's go for the budget. So I've got some webinars on budget. We're expecting this budget to be quite a big one, especially first one post Brexit, and the main one is being the middle of the pandemic, right? So we're gonna have a couple of webinars on budgets. If you're interested in joining that, please do join for those webinars too. It'll be the same link that you need to sign up on. Thank you again for joining today. Do appreciate your time and listening to me patiently and for all the questions. As I said again, if you have any questions, do come back to me. Thank you. Thank you for your time today.